Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Wednesday, November the 5th. And I'm starting off with Amedeo Resources, where it looks as though we're getting a decent rebound and a decent reaction off this 0.5 pence support area, an extended support over the course of October, and then this break to the upside through the 50-day moving average of 0.67 pence. The view at the moment is while there's no end of day close back below the 50-day line, we should head back to this 1 pence to 1.2 pence resistance, which has been in place since March. And the ideal scenario is that over the next month or so, we get back up to the top of this trend channel, which has been in place since the beginning of the year, as high as 1.6 pence. At this stage, obviously, only back below 0.5 pence. October support would be outright bearish, especially as that would also be back below the initial support of the year. Next up is Forte Energy, where we have basically a similar situation to Amedeo. Really, we've got this extended price channel. In this case, it's 1 year old. Rebound off the channel, back above the 0.1 pence support level. The stop loss could be as tight as 0.13, which is the 10-day moving average. The overall target here over the next 2 to 4 weeks, if everything goes to plan, would be a return to the top of this channel and the 200-day moving average of 0.32 pence. If you're cautious on the shares, maybe to wait for 0.2 pence to break. That was the support on the way down in October, and that could become resistance now. But it does look as though this RSI configuration from deeply oversold levels should be able to dig this stock out of the recent bear run. Finishing off with what is probably my favorite of the three stocks, slightly bigger company, well, relatively speaking. That's Petropavlovsk. Here we've got this extended bounce off the floor of a falling December price channel. Obviously, the shares have been pounded along with the gold price and due to the company issues as well. But we've got this double bounce off the RSI 40 zone, break also the neutral 50 zone as well to leave the RSI at 53, which is generally a non-volatile buying area, and this sort of double, sort of triple support here that we've seen at the floor of this channel. The view at the moment is that while there's no end of day close back below the 20-day moving average at 22.65, we have an initial target here around 29 pence, perhaps 30, 31 pence as well, as an overshoot of the 50-day moving average, and a best case scenario target by the end of the year as high as 40 pence, which would be the top of the late 2013 price channel. That's it for me. More updates at spreadbetmagazine.com.